Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at USA rare earth.
If you find our talks useful, please consider subscribe, like, and comment underneath. So today, I want you to picture like an F-35 fighter jet, right? Or the drivetrain of a top-tier electric vehicle, or even one of those next-generation wind turbines.
Right, the really high-tech stuff.
Exactly. And none of these advanced technologies can actually function without high-performance, heavy, rare earth permanent magnets. They just don't work.
No, they don't. It's the core component.
Yeah. But right now, if you want to build those technologies, you face this massive, glaring problem. Like 99% of the processing capacity for the exact elements you need is controlled by literally a single country, and that's China.
Yeah, 99%. It's almost hard to wrap your head around that number.
It really is. So today, we're looking at the one American company that is actively trying to break that absolute monopoly. We're looking at a business that's currently transitioning from basically a pre-revenue developer into this massive commercial powerhouse.
And, for you as an investor trying to navigate this space, this represents a totally unique wealth-building opportunity. Because, it's driven by what is arguably the largest geopolitical supply chain shift in modern history.
Yeah, totally. And that framing is just so crucial here because we can't just look at a balance sheet today and understand what's happening.
Right, you've missed the whole picture.
Exactly. We have to look at the macro reality of the materials sector. The global supply chain for these critical minerals is, well, it's bottlenecked by design.
Oh, absolutely by design. China currently controls roughly 70% of all rare earth mining globally, which is a lot, obviously.
Right. But mining is just, pulling dirt out of the ground.
Yeah, exactly. The real choke point, the place where they really squeeze the market, is refining that dirt into something you can actually use. So they control over 90% of global rare earth processing.
Over 90? Wow.
Yeah. And then for the heavy rare earths, which are the specific, really crucial elements required for defense and high-end tech, that's where they hit that 99% of processing capacity. It is just an absolute, virtually uncontested monopoly.
So basically, all roads for modern defense and green energy run directly through one geopolitical rival.
Precisely.
Which is wild. But that reality is exactly what brings us to the foundational moat of USA rare earth. Like, their entire strategy is built on becoming the only fully integrated ex-China mine-to-magnet company in the United States.
Right, the whole mine-to-magnet thing.
Yeah, but mine-to-magnet is, it's one of those corporate buzzwords that gets thrown around constantly.
Yeah, it sounds great in a pitch deck, sure.
Exactly. So we really need to unpack what that actually means on the ground, because the logistical undertaking we're talking about here is just massive.
It's an incredibly complex supply chain to build from scratch. Let's just trace the physical path for a second. First, they are extracting the heavy rare earth materials from their Round Top deposit down in Texas.
Okay, so it starts in Texas.
Right. But, you can't just stamp a magnet out of raw ore. That's not how it works. So they actually ship those materials across the Atlantic to a facility called Less Common Metals over in the UK, and that's for a process called metallization.
Wait, I want to pause on metallization for a second because that sounds highly technical. What is actually happening when it gets to the UK?
Good question. So think of the rare earth elements coming out of Texas as a refined, separated powder.
Okay, a powder.
Yeah. It's pure, but it is not a metal yet. So metallization is this really highly specialized process of taking those oxide powders and basically converting them into a physical metal alloy, an alloy that can actually hold a magnetic charge.
Oh, gotcha. So they have to literally change its state.
Exactly. And very, very few facilities outside of Asia can do this at any kind of scale. So once the UK facility turns that powder into the specialized metal alloys, it gets shipped back across the ocean to Stillwater, Oklahoma.
So back to the U.S.
Yep. And Oklahoma is where USA Rare Earth handles the final manufacturing to create the actual finished permanent magnets.
It's such a fascinating workaround. It really makes me think of trying to build like a high-tech car factory.
Okay, how so?
Well, it's like, imagine you have the factory blueprints, right? You have millions of customers ready to buy your cars. But your biggest geopolitical rival is the only entity on the entire planet who knows how to make the batteries and the tires.
Right, yeah. You're stuck.
Exactly. You can build all the car frames you want, but without those critical components, you are completely dead in the water.
That's a really good way to put it.
Yeah, so USA Rare Earth is looking at this global setup and saying, fine, we aren't just going to build the car. We are going to buy the rubber tree farm, construct the chemical processing plant, and build the tire factory all at the exact same time.
Right. But the challenge with building the rubber tree farm and the tire factory simultaneously is, well, it's time.
Yeah, time and money.
Tons of money.
Yeah.
Building a sovereign supply chain from literal dirt to a finished industrial component is notoriously slow. And as you said, incredibly capital intensive. I mean, you're talking about years of permitting, years of construction, and endless testing.
Which means they really have to find a way to accelerate that timeline
Yeah.
because the market isn't going to wait around forever.
No, it won't.
And, you don't accelerate that by just building faster. You do that by buying a shortcut.
Exactly. And that brings us to their massive $2.8 billion strategic acquisition of a company called Serra Verde.
$2.8 billion. That is not a small shortcut.
No, it's the absolute cornerstone of their acceleration strategy. To understand why they are spending nearly $3 billion, you really have to look at what Serra Verde actually produces.
Okay, let's look at it.
Right now, it is the only scaled producer outside of Asia that's currently delivering all 4 critical magnetic rare earth elements.
Which are?
That's neodymium, praseodymium, terbium, and dysprosium.
Okay, let's break those down a bit because I know the chemistry basically dictates the economics here.
Yeah.
Why do we specifically need those 4 elements?
So neodymium and praseodymium, they're often just referred to together as NdPr.
NdPr, got it.
Yeah, those are your base ingredients. They are what make the magnet incredibly powerful for its size.
Right.
But here's the catch: power isn't enough. If you put a pure NdPr magnet inside, say, an electric vehicle motor, and that motor heats up to really high temperatures, the magnet literally loses its magnetic field.
Wait, really? It just demagnetizes?
Yes, it totally demagnetizes. It just fails.
Yeah.
So that is exactly where the heavy rare earths come in, the terbium and the dysprosium.
Oh.
Yeah, adding just a tiny small amount of those 2 elements acts like this thermal shield. It allows the magnet to operate at extreme temperatures without failing. So basically, you literally cannot build a modern EV or, a guided missile without terbium and dysprosium.
And China controls 99% of the processing for them.
Exactly.
Man. Which completely explains why USA Rare Earth was willing to structure this Serra Verde acquisition with a massive 15-year offtake agreement.
Yes, the offtake agreement is huge.
And for you listening, if you might not be super familiar with the term, an offtake agreement is essentially a legally binding contract.
Yeah.
So USA Rare Earth agrees to buy the future production of the Serra Verde facility.
Right. They're guaranteeing a buyer.
Yeah.
Yeah.
But it is the specific conditions of this agreement that really stand out to me. Like, they locked in hard price floors.
Yes. And those price floors are basically the defensive mechanism of the entire operation. So they locked in $110 per kilogram for the NdPr, then $575 per kilogram for the dysprosium, and a really staggering $2,050 per kilogram for the terbium.
Over $2,000 a kilo.
Wow. But why do hard price floors matter so much in this specific context?
Because of China's historical playbook.
Yeah.
This is what they always do. Whenever a Western company tries to open a rare earth mine or a new processing facility, China will often just flood the global market with incredibly cheap materials.
Right. They artificially crash the commodity prices.
Exactly. They push the prices all the way down to the floor, and they intentionally take a loss doing it.
Yeah.
Because they're backed by the state.
Right. And then the new Western competitor, who has, all these huge startup debts to pay off, suddenly they can't sell their products for a profit.
And they go bankrupt.
Yep. And once the Western company shuts its doors, China just spikes the prices right back up. It's ruthless, but it works. But by locking in those price floors for 15 years, USA Rare Earth is ensuring that no matter what kind of crazy price war happens in the global commodity markets, the Serra Verde operation will remain economically viable.
That is smart.
It is. They have established a structural economic floor that literally no other Western competitor currently possesses.
And the scale they're aiming for with this is just massive. I mean, once the Serra Verde deal is fully integrated, they're targeting to supply over 50% of the non-China heavy rare earth supply by 2027.
Yeah, half of the entire Western supply chain under one single roof.
It's crazy. But, and here's the big but, securing half of a global supply chain requires billions of dollars.
Obviously.
So let's look at the financial realities here, because this is where things get tense. How on earth does a company that's just transitioning out of the pre-revenue phase afford a multi-billion-dollar acquisition?
Well, we really have to look at the transition points in their recent earnings. In their Q4 2025 report, they actually hit a major psychological and, well, operational milestone.
Right, I saw this. $1.64 million in revenue.
Exactly. Now, against a $2.8 billion acquisition, sure, 1.6 million is basically a rounding error.
Yeah, it's a drop in the bucket.
It's true, but it marks their first ever sales. It is the real validation that their commercial engine is actually turning over.
Right, the proof of concept is officially there.
Mm.
And they are currently commissioning Phase 1A of that magnet manufacturing facility in Stillwater.
Yep, the Oklahoma plant.
And that facility starts fulfilling real orders in Q2 of 2026. They're projecting this big ramp up to 600 metric tons of production per year by the end of 2026, and then doubling that 1,200 metric tons by Q1 of 2027.
Right, so the operational ramp-up is very clearly mapped out. But obviously, funding it requires an incredible amount of liquidity up front. So following a recent PIPE raise, they actually fortified their balance sheet significantly.
And let's quickly define a PIPE raise for you listening, because it's a super important mechanism here. PIPE stands for Private Investment in Public Equity.
Right.
Basically, instead of selling shares on the open stock market to everyday retail investors, a company goes directly to massive institutional investors and sells them a huge block of shares for an immediate massive injection of cash.
Exactly. And because of that massive capital injection, reports show they're sitting on somewhere between $1.2 and $1.75 billion in cash.
With zero debt, right?
Yep, zero debt. And when you factor in the acquisition, their pro forma liquidity, which basically means the cash and available capital they're going to have immediately after the Serra Verde deal closes, that sits at roughly $3.2 billion.
Man. And on top of that, they have a pending non-binding letter of intent with the U.S. Department of Commerce.
Right, the CIPS program.
Yeah, for a $1.6 billion funding package under the CIPS program. So the war chest is undeniably massive, but, and I'm going to play devil's advocate for a second.
Go for it.
I have to push back here, because if I am an everyday investor looking at this stock, I see some glaring, flashing warning signs.
Okay, let's hear them.
Look, building this untouchable moat is bleeding them dry. Their operating losses currently stand at a negative $285.4 million.
Yeah, the cash burn is real.
It's phenomenal. They are burning cash at a phenomenal rate to build these refineries and manufacturing plants. And to execute that $2.8 billion acquisition of Serra Verde, they are issuing nearly 127 million new shares.
Right.
And we all know issuing that much new stock dilutes the value of every existing share on the market. So why shouldn't an investor run for the hills when a company prints 127 million new shares while burning hundreds of millions of dollars a year?
I mean, it is the absolute right question to ask. Dilution and heavy cash burn are usually, the death knell for a retail stock.
Exactly.
But, and this is the key, you cannot evaluate a heavy infrastructure play using a software company's metrics. You just can't.
Okay, fair point.
You really have to look at the 2030 horizon to understand the management's math here. The cash burn is severe today because building the physical infrastructure, like the chemical processing, the metallization logistics, the Oklahoma factory, that requires massive upfront capital.
Sure, building physical things is expensive.
Right. However, management models an 80% free cash flow conversion rate once this heavy capital expenditure phase concludes.
Okay, let's clarify free cash flow conversion for a second.
Mm-hmm.
That essentially means that for every dollar of profit they make in the future, 80 cents of it becomes pure, unencumbered cash in the bank. Right.
Correct. Because, once you build a specialized refinery, you don't have to build it again.
Right. The hard part is done.
Exactly. The maintenance capital required to just keep it running is relatively low compared to that massive initial construction cost.
Okay, but what about the massive share dilution?
Well, as for the dilution, you really have to look at what those new shans are actually buying. The Serra Verde integration is expected to add $550 to $650 million in annualized run rate EBITDA by late 2027.
Wow. And EBITDA earnings before interest, taxes, depreciation, and amortization, that is basically the raw cash-generating power of the business before the accountants get involved.
Right, exactly. And by 2030, the combined company is targeting roughly $1.8 billion in EBITDA.
$1.8 billion.
Yeah. So the argument here is that the dilution is ultimately accretive. You might be giving up, say, a percentage of your ownership slice, but the overall pie is transforming into this fortified, cash-generating monopoly in the Western Hemisphere.
I see the logic. I mean, it really is the difference between a company burning cash because they have a terrible product nobody wants
Yep.
versus a company spending billions to build the only functional toll bridge across a river.
Oh, I like that analogy.
Yeah, like, yes, building the bridge is expensive and it hurts right now, but eventually everyone has to pay your toll.
And everyone will have to pay.
So given that fear of dilution versus the promise of a monopoly, how is Wall Street actually digesting all this news?
Well, the market reaction to the Serra Verde deal has been explosive, to say the least.
Really?
Oh, yeah. After the April 20th announcement, the stock jumped 13% in a single day.
Wow.
And over a 5-day period, it rallied 23.5%. We've actually watched this stock surge from a 52-week low of $8 all the way to a high of $43.98.
That's a fundamental re-rating of the company's value right there.
Absolutely. Their momentum score surged from 14.46 all the way up to 90.22.
That's huge. But, the technical indicator that really stands out to me is the volume. They were trading 15 to 17 million shares on average daily volume.
Right, which addresses your dilution concern.
Exactly. Going back to my concern about the massive share dilution, the market is absorbing those 127 million new shares with incredible ease. The institutional demand to own a piece of this asset is completely swallowing that massive new supply of stock.
Yeah, and when a stock rallies on heavy volume despite a massive dilutive event, it heavily signals intense institutional accumulation.
Right. The big money is moving in.
The institutional players believe the strategic value of securing a non-China supply chain far, far outweighs the expanded share count. And we're seeing this reflected in analyst coverage, too.
What do they say?
So Wedbush initiated coverage with an outperform rating and a $29 price target. But Simply Wallsaint went even further. They ran the cash flow models and calculated a fair value estimate of $38.60.
Which implies what, like a 77% upside from their base models?
Exactly, 77% upside.
The ownership structure also tells a pretty interesting story of long-term belief here.
Oh, definitely. The government ties.
Yeah, the U.S. government is effectively taking an equity-like position through that GPS setting package we talked about. Moreover, the legacy shareholders of Serra Verde, these are major players like Vision Blue Resources, they are taking a 34% equity stake in the newly combined company.
Right, they aren't just taking a cash buyout and walking away.
Exactly. They want a third of the new empire. And that aligns the long-term incentives beautifully.
It really does. So the momentum is overwhelmingly bullish, but, we still have to do a rigorous risk assessment.
Always. Because a $2.8 billion deal across international borders is never just a guaranteed slam dunk.
Right. So we have to address the bear case, specifically the execution risk down in Brazil.
Yeah, let's talk about Brazil. Looking at the geopolitical landscape, Brazil just has a highly complex regulatory environment.
It's tricky to navigate.
It is. Like a left-wing political party down there have actually filed a formal Supreme Court challenge seeking to block the Serra Verde sale entirely. Additionally, Brazil's government recently ruled out creating their own state-owned rare earth firm.
Which complicates the landscape even more.
Right. And to be completely clear for you listening, we are looking at this strictly as a factual regulatory hurdle. We're not taking sides. The domestic politics of Brazil just represent a massive legal complexity that could delay or even derail the closing of this cornerstone acquisition.
Yeah, operating globally means subjecting your timeline to the domestic legal frameworks of foreign jurisdictions. It's just effective business. And the Supreme Court challenge is a legitimate, tangible risk.
Definitely.
But, and this is where it gets really interesting, this is where the mitigation strategy comes into play, and it involves the U.S. government stepping in directly.
Wait, really? How so?
The deal is financially supported by the U.S. International Development Finance Corporation.
The DF.
Yes, the DFC, which provided a $565 million financing facility.
Wow. See, this is the real aha moment for me. The U.S. government is putting over $500 million directly into the financing of a Brazilian mine acquisition.
Right.
Like, this is not a private company simply buying an asset anymore. This is the United States government basically weaponizing a corporate balance sheet to secure critical national defense materials.
That is the exact dynamic at play here. The DFC's involvement basically embeds U.S. diplomatic weight directly into the transaction itself.
That's fascinating.
The U.S. government is signaling to the international community that acquiring Serra Verde is a matter of strategic priority.
Yeah.
And that diplomatic leverage serves as the primary counterbalance to the local regulatory risks that are, winding their way through the Brazilian courts.
Man, it just elevates the entire situation, from a standard corporate merger to an active piece of national statecraft.
It absolutely does.
So bringing all of this data, all these geopolitical moves, and all of these financial projections together, what is the actual timeline? Like, what are the hard dates and deadlines you need to mark on your calendar?
Okay, so in the short term, you got to keep a close eye on the Q1 2026 earnings.
What are we looking for there?
Well, you aren't looking for massive bottom line profitability yet. You're looking for initial revenue generation from the Stillwater magnet facility. We just need proof that the Phase 1A operational ramp-up is actually producing commercial-grade materials that clients are actively paying for.
Right, proof that the wheels are turning. Moving to the medium term, Q3 of 2026 is a massive window.
Massive.
First, that is the expected closing date for the $2.8 billion Serra Verde deal, meaning overcoming those Brazilian regulatory hurdles and finally finalizing the transaction.
Right. And second, they are scheduled to complete the preliminary feasibility study for their domestic round-top deposit in Texas.
Which will outline exactly how much material they can reliably pull from U.S. soil.
Exactly. And then we hit the big one, the macro deadline.
Yeah, the forcing function for this entire investment thesis hits in January 2027.
Tell them about it.
So there is a legally mandated ban taking effect that prohibits the use of Chinese-origin neodymium iron boron magnets in U.S. defense systems. The U.S. military literally will not be allowed to buy these components from China.
Which is wild, considering they control 99% of the processing.
Exactly. And at the exact same time, China is proactively tightening their own rare earth production oversight. They're implementing strict new quotas on what they will even allow to be exported.
So you basically have a hard legal cutoff where the largest defense buyer in the world, the U.S. military, is legally barred from buying from the monopoly provider right as the monopoly provider is restricting supply anyway.
It is the absolute perfect storm for Western demand.
It really is.
Which brings us to the final thesis. Based on the integration of the supply chain, the massive capital backing we've seen, and these impending defense deadlines, the overall bullish score sits at a solid 8 out of 10.
That's a strong score.
Yeah, but to be clear, this is not a stock you day trade for a quick flip. This is a multi-year hold offering you asymmetric exposure to a structural, legally mandated reallocation of global supply chains. USA Rare Earth is basically building the infrastructure today for a reality that legally goes into effect in January 2027.
It's just a fascinating convergence of corporate ambition and geopolitical necessity.
Totally.
And, it leaves us with one final thought to ponder here. If USA Rare Earth is essentially serving as the primary proxy for Western supply chain independence, what actually happens to the global defense and electric vehicle ecosystems if that U.S. defense ban hits in January 2027 and this single company hasn't managed to scale up fast enough?
Oh, wow. That's a scary thought.
Right. I mean, are we simply looking at a publicly traded company, or are we really looking at a national security necessity that is just disguised as a stock?
That tension between corporate execution and national security is exactly what makes this opportunity so compelling. It's huge. Thank you for joining us for this session, and we will catch you next time as we continue to track these major shifts in the market. Keep watching those catalysts.